Hi, this is Bob Iaccino coming to you from the CME Group trading floor on a Columbus Day holiday in Chicago. Bond markets closed today, but equity markets were open and the Dow was furiously basically unchanged. Nothing really going on in the equities in terms of movement. They were a little bit mixed. You had the NASDAQ slightly higher, Dow and the S&P slightly lower. Again, these are tenths of a percentage point. Nothing even worth speaking of. Russell was slightly lower through most of the day. So it just wasn't much of a move. But if you start looking at Dow components, you see a little bit of interesting data that might play out further into the week. General Electric, their CEO, John Flannery, is talking about cutting the dividend. General Electric was down 4% at its lows today and finished much lower, not much lower than 4%, but finished much lower on the day, helping keep the Dow on the negative side of unchanged, but still not enough to really hurt the index. I mean, the index overall, again, I would call this a basically unchanged day. When you've got the bond markets closed, you've got a lot of equity funds and traders that will take the day off as well and just monitor positions. It is considered a low liquid day. A low volume day with low liquidity for the equities as well. But we also have the prospect of earnings starting again this week. Earnings generally start somewhere in the second week of the month following the last month of the previous quarter. That would be October. Third quarter ended in September. So we've got earnings starting, and it's bank earnings coming to the forefront first. On Thursday, we've got Citi and JP Morgan. On Friday, we've got Wells Fargo, NPC, and Bank of America all reporting. So the market's going to be looking out toward those, same way they were looking out toward the non-farm payrolls that we had on Friday, which again showed those wage increases and has the market basically believing that the Fed's going to hike. So we expect to see the bank earnings better. We did have a little bit of a steeper yield curve for a decent amount of the quarter, which is going to help bank earnings. So you're probably not going to see a correction until if you're expecting a correction, you're not going to see much of a sell-off in equities until we start getting earnings in. And if they disappoint, then you'll get that extra push of the Fed tightening rates, pushing equities lower. Otherwise, streak is over. Looks like we may start a new one when we get some volume back. This is Bob Iaccino talking Dow futures from the CME Group trading floor in Chicago.